Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linden Associates with your agriculture update for this Thursday, and this is the 4th of May, 2017, just getting on to 1:40 p.m. Central Daylight Time. All right, we have a down day in all of the grain markets, as you can see. Wheat got hit especially hard. Now, for those of you that do get my twice daily market research, you're going to see that I'm including a big study from Kansas State University. And they go through the damage to the hard red winter wheat in the western part of the state, and I think it's very important. So I'm going to be including that in tonight's report. A link will be actually how I'm doing this. But as you can see down here, this wasn't the only market down. Look at the metals. They got smashed. Look at the dollar. Down hard as the euro soaring, and you really want to get nervous. Look at what's going on in the energy markets. That's not a misquote. You're down another 6 cents a gallon in gasoline, so what you should all do is get in your cars, head to a beautiful climate, don't fly, drive. This stuff is dirt cheap. It's a boon for all of us as we get into the spring and summer driving season, so enjoy it. Let's take a look at what soybeans have done. We're getting a bounce. We're up for the week, 20 cents on the weekly chart, which is real nice. The market is off the lows approximately 26 cents. If you am I right on that? Or 36 cents? 36 cents. So the market is up 36 cents, which is very nice off the lows, not for the week. The week it's up 20, with the lion's share of the gains, obviously, this week. As we take a look at how prices went, you backed off today another penny. The high close is so far 75 1/4 since we've had that low that broke down all the way from the beginning of the year. This was the break low of the year on a closing basis, and we've climbed off of that. Not dramatically, but we have climbed a bit. The meal market just back and forth here. I'm sorry, that's still soybeans. Just back and forth here on the bar chart. I don't know why I said meal. And if you look at the chart, you still have the pattern of higher lows, higher highs. The question is this high now at 980 going to give a bit of a correction, but it's still a higher high than 978.5, so there's nothing yet harmful on that chart. Should prices get under 966, you do the damage to the chart in the sense that you then remove the pattern of higher lows, higher highs, with the upside bias because the market's over the 18-day average of closes. I would think that's the number you don't want to see the market take out. When we look at why the market is suddenly stalling here, I want you to look at the upper Bollinger Bands. They're running into trouble right here. And that's very, very important because as this goes and as you look at it, markets that tend to come out of this can get a nice upthrust. The question is, can they come out of it to the upside, or is the market going to get thrown back to that 18-day average of closes and frustrate traders? When we look at the market in terms of momentum, you're overbought. So here's what you've got. You've got a market that's in an uptrend. The bias is up with it. The market has hit upside targets of the upper Bollinger Band. It's encountering resistance there in an overbought condition. In the meal market, the meal came down today, challenged again the 18-day average of closes, held it, did close lower on the day, but did a good job of holding that. Now I'm getting concerned that the pattern is one of lower highs and higher lows. I don't like when I see that in a market. When you come to the soybean oil chart, you made the highest high of the move today, and like the beans, you closed lower on the day. Here, too, you are terribly overbought. So you have an uptrend, you've hit upside targets, you got upside bias, and you're overbought. In the corn actually threw out a sell signal today as a technician. Why? You now have the pattern of lower highs and lower lows. Prices closed under the 18-day average of closes, and the momentum turned down. So unless and until prices take out today's highs, The market is targeting, at least in the chart pattern, lower lows with maybe one of the potentials back to the 61.5 zone, the lower Bollinger Band. What's the obvious thing on the chart? You have to pay attention. You went from an upper Bollinger Band to a lower Bollinger Band to an upper Bollinger Band, and maybe you'll get down to the lower one. In the whole process, you didn't really expand the trading range, and the Bollinger Bands are staying about where they're at because the market's moving within that momentum stratus, if you will. When you come to the wheat chart, you have a pattern of a lower low, a higher high, and the market is pulled right back to classic work. First, it stopped at the 100-day average yesterday. If that gives ground, the next potential supports the 18-day average, and the market did exactly that. So now what the market needs is a pattern where you start developing higher highs and higher lows if you're going to be in an uptrend, or it gets under the 18-day average, starts developing that to the downside, lower highs, lower lows. I don't know where you're at with it. I know that momentum is still correcting an overbought condition, and it's out of being overbought with today's pullback. In the sugar market, if you get my or have access via my research to my to my morning subscriber video, I had talked about this market, and I said, gee, if you can start clearing these lows, you're going to make a run at that lower Bollinger Band. And then the question, I said, do you go for the lows, period? And you did. So that was the good news on that market. Still very much a market that has got very big downside bias, but it is oversold. A market that I've been pointing out has been running into trouble at the 18-day average is the coffee. And now, with today's break, you got under a previous low. So you've got a pattern that's not trending. You've got a higher high, a lower low in a market that was oversold and has corrected that. The bears still have control because the market's unable to close over that 18-day average period. In the cocoa, I was talking about this morning in my update, and I said, you know, here we are with the market yesterday, and the low was 1772. Early on, the market got to that low this morning, didn't penetrate it, and I started saying to my subscribers that if you got over this high, you might get short covering because you have such an oversold condition. This is what's happening. The market was unable to take out 1845. If it does, the next target's 1872. You will not start a trend here in terms of higher lows, higher highs if that takes place, because you got a lower low. The best you could do is a higher high into that 1872 area. Could you fail here and start a bear trend? Absolutely. Just fail at 18, not take out 1845, but you'd have to embed this stochastic, and you can't do that right away. So no matter what you do, the trend is down, the bias is down, but you're terribly oversold. You're knocking on the door of trying to knock out the downtrend, but even when you do, you got a pretty big resistance point at 1872. Assuming you clear that, well, then I don't see an awful lot of resistance to back up here on that chart. In the cotton market, it watched all the grains back off today, and it held up, but and there's a terrible but here. You still have this pattern where you're very overbought. So being a buyer, and the market is in an uptrend with higher lows and higher highs, you're running out of momentum, and momentum is actually diverging now from price action. If you believe, as I do, that momentum leads price, it's giving you a warning sign. In the cattle market, up and away, and another solid up day, but you couldn't close near the highs. Nothing wrong with that. You're still up 125 points. You've had an embedded slow stochastic with a run against the upper Bollinger Bands. I do not look for big breaks off of action like that. In the feeder cattle market, a very wild day. You had a range. Now get ready for this range. 730 points. Believe me, it's called breathless if you've been a cattle trader. The momentum is still embedded, but it's starting to turn down here. And today, all the market did is get over the upper Bollinger Band and close back under it. That's how I'm reading the chart. The market is being run not by the swing line, but by the embedded readings. If you lose that reading, you could expect a good-sized correction. And in the hog market, hogs are right where I think the market's got a real problem. The upper Bollinger Band and the 100-day average of closes. When you look at how this went, it would not surprise me if there's a lot of put buying going in this market, seeing if they can get a break off of it, a quick one. I don't think you want long-dated puts if you're picking tops because cattle's still looking overall so bullish. So you put all that together, you got an interesting day, and I'm going to be all over this market again in the morning with 40 charts that I review, throwing out specific buy and sell signals to you. Would you like to have access to it? I hope so. It's very simple. This is what my paid subscribers do. I'm willing to let you see it for a couple of weeks so you can get a feel what it is if you haven't tried it before. If you have, it's time to buy it, or the heck, I got nothing else to show you. But if you do want to see it, because it comes with my written updates and all the information, plus we put you on the Lynn research during the trial, pretty good deal. All you need to do is give us a phone call, go to our website, you'll see a carousel of free offers. Under us, it'll say click here in many websites for Ira's free offers, or if you click right up here, if you're watching me on YouTube, you're going to see an icon, click it, the form will open from there, and away you go. I'm Ira Epstein, thanks for watching, and I'll see you all in my other videos.